Welcome to financial accounting. This time around, we are going to consider a topic which is posting to ledger accounts. So in this study, we are going to understand what a ledger is and what a ledger accounts is. Right, we make a progress. We start with the definition of a ledger. So what is a ledger? A ledger is the principal book of accounts in which all business transactions are classified and recorded under their respective accounts. That is after being transferred from the books of original entry. So this is what we call as a ledger. Right. So now let's try to define a ledger in a simplest way. So how can we define ledger in a simplest manner? A ledger can also be defined as a book that contains all the accounts of a business showing their debit and credit entries. I want to believe that this time around we already know what a debit and credit entries are. Right. Now, how can we define a ledger in a formal way? So in a formal way, a ledger can be defined as a book of final entry where transactions recorded in journals and other subsidiary books are posted to individual accounts so as to determine balances and prepare financial statements. Right, what is a ledger account? Now that we know what a ledger is, the question now is, what is a ledger account? So a ledger account is a detailed record that summarizes all transactions related to a specific item such as cash, sales, wages, machinery, or a person that is over a given accounting period. Right. So you need to understand that a ledger account is kept in the ledger, which is known as the book of final entry in the accounting. That's one thing that you should also know. Now, a ledger account shows, or it can also be defined as the account that shows where money comes from and where it goes for one particular item. That is a ledger account. So a ledger account, it is a type of account that shows where money comes from and where it goes for one particular item. Right. A ledger account can also be defined in a formal way as a classified record in which debit and credit entries from the books of original entry are posted in order to determine the balance of each account. So this is how we can define a ledger account in a formal way. Now let's try to look at the key points about a ledger. What do you need to know, or what are you supposed to know about a ledger? So a ledger is called the book of final entry. So a ledger, it is called the book of final entry. What else do you supposed to know about the ledger? Or what is another key point about a ledger? A ledger contains all ledger accounts. Okay, so a ledger contains all ledger accounts. Then what else? A ledger helps in preparing the trial balance. Okay, what else are you supposed to know? A ledger forms the basis for final accounts, that is profit and loss account and balance sheet. Right? Now, you need to understand that a ledger is actually the central record-keeping book of accounting that summarizes all financial transactions in a systematic and organized manner. Right? Let's now look at posting to the ledger account. We need to have this understanding as well. Now, you are going to realize and learn that after business transactions are recorded in the books of original entry, which books are we talking about here? The books of original entry have got books like cash book, sales journal, and purchase journal. So after business transactions are recorded in these books of original entry, which I just mentioned, they must be transferred to the ledger account. Now, what do we call that process? of transferring, okay, of transferring the business transactions that were once recorded in the original entry books into a ledger account. We call that process posting. So when the transactions that were recorded in the books of original entry, books like cash books, sales journal, and purchase journal, when those transactions which were recorded in these books are transferred to the ledger account, that process itself, it is called or is known as posting. Okay, so now what is the significance of posting? So posting ensures that all transactions affecting a particular account are brought together in one place, making it so easier to determine balances and prepare financial statements. So this is very important. Now let's look at the actual meaning of posting. What is posting? Posting is simply the process of transferring debit and credit entries from the books of original entry to their respective ledger accounts. So this is what we call is posting. So the process of transferring debit and credit entries from the books of original entry to their respective ledger accounts, it is called posting. Right? Now, in simple terms, how can we define posting? Posting means copying accounting entries from journals into the ledger under the appropriate accounts. That's the simplest way on how we can define posting. Now, what's the purpose of posting? Number one, posting to ledger accounts is done in various ways, or is done for various ways. So remember, this time around we are looking at the purpose of posting. The purpose of posting, we already know what posting is. So now, what's the purpose of posting? Posting to ledger accounts is done in order to do what? Number one, in order to classify transactions under appropriate accounts. So one of the purpose of posting is to classify transactions under appropriate accounts. Number two is to determine the balance of each account. Number three is to prepare a trial balance. Number four is to facilitate the preparation of final accounts, that is trading, profit and loss account, and balance sheet. Another purpose is to maintain a permanent and systematic record of transactions. To maintain permanent and systematic record of transactions. Now, what are the sources of posting? Okay, posting is done from the following books of original entry, and these books are the ones that we call sources of posting. So posting is done from books of original entry. So now, what are those books of original entry? We've got cash book is a source of posting. So mean that transactions can be transferred from cash book to the ledger. Okay, so now what else? We've got sales journal, we have purchase journal, we have returns inward journal, we have returns outward journal, we have general journal. So now you need to understand that each entry recorded in these books is later posted to the ledger. So all these books, they are called what? Books of original entry. So whatever transaction or whatever record or whatever entry recorded in these books of original entry, later those must be posted to the ledger. What are the rules for posting? Number one, debit side of a journal entry is posted to the debit side of the ledger account. So debit side of a journal entry must be posted to the debit side of the ledger account. So the debit to the debit. So the debit side of the journal to the debit side of the ledger account. Number two, the second rule, credit side of a journal entry is posted or must be posted to the credit side of the ledger account. So credit side of the journal to the credit side of the ledger account. Number 3, the name of the opposite account. The name of the opposite account is written or must be written in the particulars column. Then number 4, the date of the transaction must be also what? Indicated. That's another rule of posting. The date of the transaction must be what? Must be indicated. Number 5, every ledger entry must have a folio. When we say folio, what do we mean? We mean reference. That is to the source book. So if the data or the entry that's being recorded is from a sales journal, it must have that reference. So every ledger entry must have a folio or a reference to the source book. We need to know where it came from.